Usually, in a very good uptrend, we would say that as prices are increasing, the strength or the volumes underpinning that increase should also be high. But something very converse is happening here, where the prices are increasing, but the strength in the uptrend has been decreasing in terms of the momentum. Monday morning, folks, and welcome to the first episode of this very new year, which is 2024. Well, markets have been operational for 2 weeks now. We've seen already a lot of action, inflation fronts, other data points as well. Specifically, last week, Sunil, we did see US CPI come in, and it did give us the same picture that US inflation is sticky. But overall, what did you make of how gold and silver markets moved last week?
Now, what we're doing is we're still, in terms of gold, moving in tandem or opposite directions to the US dollar. So the volatility of the dollar is really playing on gold. What you're seeing is that the overall appetite for investment in gold is still there, but as long as the dollar looks stronger, gold will suffer. So that's the kind of correlation that we're looking at. Um, in the coming days, I do expect that the dollar is going to get stronger as the market adjusts to the fact that inflation is sticky, and then gold should sell off towards the 2000 mark.
So
What
you
about
are of
you?
the
What do you think?
so you're of the opinion that we may see continued sell-offs after a point?
I think so. I think the US dollar is going to strengthen again. The realization is going to come in that the Fed may not even reduce interest rates this year, right? What does your technical analysis show?
Yeah, something very similar. Actually, let's just jump right into that. Right off the bat, Sunil, right from the start of 2024, we've not really seen a very positive run for gold. In fact, gold has corrected from 2070, 2080 levels, and only on Friday did we see a slight run up, right? Now, I must say that on Friday, a lot of this run up in terms of price action was mainly because of geopolitical uncertainties that are arising in the markets. So traders are just insulating themselves from any developments that might happen on the weekends. So that's definitely one thing to caveat, that you may see this as a frequent occurrence every Friday, where markets just spike up on a Friday. Just traders are just trying to be on the safer side, right? But technically, and that's where the more interesting insight is, what you're really seeing is a term that we commonly refer to as bearish divergence. You see that the price charts are actually moving higher and higher. So you see higher highs being created right here, and right here. But when you look at the MACD, you don't look at the strength of those price increases to be crossing one over the other. Usually, in a very good uptrend, we would say that as prices are increasing, the strength or the volumes underpinning that increase should also be high. But something very converse is happening here, where the prices are increasing, but the strength in the uptrend has been decreasing in terms of the momentum. And this is what we refer to as bearish divergence. And this is a very, very strong indicator historically of huge downtrends that begin to start in the markets. And that's exactly where I'm coming from, and why I said I agree with you that at the moment we're looking at, yes, geopolitical uncertainties. We're looking at, okay, maybe Fed is probably wanting to still taking some time to keep rates high, but technically we are at the start of a very long term downtrend, or a medium term downtrend at least. So the next question is, what would it take for identification of that downtrend? What I would say is, this week we would look for a long red candle somewhere here that kind of engulfs this large green candle over here. That's an indication that you are going to see a continuation of this pullback, and you're going to see a retracement of this 2008 support right over here. So if I was trading the markets, I would basically set myself up as to a short position, where I would set my stop losses to be somewhere around these highs over here, and I would set my target to be around this 2008 level to 2010 area, which is also where you see this thin green line coming, which is a 50-day support. So I'm really talking about a 2 to 3 week prediction, where I'm saying that the moment you see one big red candlestick right here, you're immediately going to see a major pullback in the prices. And this is probably the way you would want to position yourself in the event that might happen. There is also an off chance that data comes in support, but technically, looking at the strength and looking just on the basis of technicals, the markets are painting a slightly different picture.
Excellent. So you're basically saying the market is overbought. What's
Yes.
the high level that you're saying you need to short at? What's the level that you would,
Yes.
the top of that?
Yes, apologies. I
What
should
level
have
is that?
mentioned that. That is around 2075.
Okay.
So we're saying the markets are currently at 2050. We are saying
Yeah.
that probably at the start of the week, the markets may rise. But the moment you
Mm,
see a big candlestick formed on the daily chart, that's where you need
mm,
to short yourself. You can set your stop losses at 2075 at the max,
mm.
and you can set your target somewhere around the 2008 to 2010. That's the region. That's a very small region, but basically around that end, because that's where you have your support basically. Lastly, Sunil, just yesterday we got the news that the SEC has approved Bitcoin ETFs, which kind of opens an entire new avenue for investors. And it also, in a way, legitimizes cryptocurrencies for the very first time, at least Bitcoin, if not the other cryptocurrencies that we have. There's been a lot of talk of how that might eat into some of gold's gains this year because other investors might look at that to be an alternative channel. What is your take on that, basically?
Think some of the younger investors may gravitate towards Bitcoin because now that option is there. But the market for gold remains quite strong. I would say Bitcoin. When the gold ETF was set up in 2002, 2003, there was a big rush of investment into gold. And so that's why people are expecting that when Bitcoin ETFs go in full fledged, you may see a sudden influx of money. But what has happened actually on Friday was that Bitcoin came off almost 7.5, 8%. And mostly I think it's because people were holding Bitcoin. And as soon as the ETF were created, they sold into the ETF and delivered BTCs. I don't think it's going to impact gold in the long term, really. It's a different market altogether.
Well, thanks, Neil. Let's watch out for the markets again as we normally do. But till then, thank you so much and goodbye.